With the rise of remote work since the pandemic and a lot of other factors, even before then, we've had a lot of entrepreneurs having companies different from where they reside, and we've had a lot of entrepreneurs also traveling away from where they maybe set up their businesses. And we all know governments and taxes are a very complicated topic. I'm one of the people who I'm talking about in this episode. When I set up Target ICT, I lived in the UK. Over time, I moved to Istanbul, moved to Nigeria, and I had to think of all the taxes, the changes in the tax laws, changes in what I had to file, and stuff like that. And today's guest is the online taxman. So that's his specialty. We're going to talk about online taxes as a business, especially how to maybe reduce your taxes, how to stay compliant wherever you are, and maybe just everything in between. So, welcome to the show. His name is Vincenzo Villamena. Welcome to the Tech a
Thank
Business
you.
podcast.
Thanks for having me.
Thank you so much. So now, I think we'll start with US business owners first of all. So for a lot
Uh,
of US business owners, we have a lot of them traveling out of the country for different reasons or trying to set up their businesses out of the US. So what's one common thing you've seen that catches them off guard when they try to do that or when they do that?
yeah, I mean, I think that, getting the structure right first is always really important, whether, you're a U.S. business owner or not. Um, you know, we have a lot of people that are, with international tax situations. So it's like, well, if you're an American living abroad, it might be more beneficial for you to even own like open up a foreign structure, right? Like in Cayman Islands or British Virgin Islands or something like that. But if you're living in the U.S., you don't really have that ability to tax optimize if you're a U.S. business owner. So we say like an S corp could be good, right? And then the other side, of course, is you're a foreigner that wants to do business in the U.S. and an LLC is good. So I think it's always related to the circumstances of each person, right? Especially like where they're living and where they're located.
Okay. So now for okay, so like let's say I'm a US resident. I started my business in the US, and then maybe I'm tired of living there. Okay, I think you mentioned maybe opening up a foreign structure rather than the US structure.
Yeah.
So, then let's say maybe I move to the UK. Let's say I move to the UK from
Yeah.
the US. What changes would I see?
Yeah, so that's the thing, right? So, to your point, like a lot of people are maybe leaving the U.S. for whatever reason, especially now, like everyone's like trying the digital nomad thing or expat thing. And so, um, for example, if you're a U.S. person, right, American or green card holder, whatever, and you decide to, you see a lot of people moving to like Texas and Florida because of the lower taxes in those states. But then if you move outside the United States as an American, then you can get your first $126,000 tax free, right? So you could not pay any tax in the United States on that income from your business or even like a job in the U.S. that you're working remotely, and so that's called the Foreign Earned Income Exclusion. So we have a lot of people again who are like thinking about moving abroad or on that track. Now, to your point, it really depends on where you live, right? Of course, if you live in the UK, as you know, there's a lot of high local taxes. So, that might not be the best, quite a most tax efficient option because, of course, then if you're going to become a U.S. tax resident, stay in the UK over 180 days, um, then you can be a. And so then if you end up basically being in the UK over 180 days, then of course you're going to be a UK tax resident. But you know, there's other countries where there's less enforcement or, you know, not as much of a risk. Like, for example, South America, Mexico, there's a lot of people now living in Bali, so like Indonesia, like a lot of these countries where, again, if you're not earning money locally, you're not going to be taxed locally. So I think it's, this is U.S., but this could be anybody, right? Anyone who's a digital nomad. I think it's just important to understand what are the local tax implications if they're going to tax you locally or not, and how that looks.
Okay. So now I think I mentioned this earlier when we were speaking. For a lot of people doing business online, the markets, most of the time, the biggest market is the US. And
Yeah,
trying to target the US with a foreign entity, we still have the whole tax situation, the whole complications and all that. But there are a lot of people that talk about being able, especially as a non US resident, to have maybe a company in the US and run it tax free. So, can you explain? Is that true? Can you explain how that happens?
yeah, and so that's exactly. I mean, on the other side of it, right? For non-Americans, U.S. is one of the biggest tax havens in the world, right? Because they want to encourage people to, open up bank accounts and do business in the U.S., et cetera. So they essentially make it tax free for any other, again, any non-American to basically open up a U.S. company and U.S. bank account, and as long as you don't have any um, like offices, like real office, not like a virtual office mailbox, but like real office space, employees, right? Not contractors, but employees, and then like warehouses. So like e-commerce, it gets a little bit complicated, but um, so yeah, so it's actually quite easy, and obviously this is a service that we offer to open up a U.S. bank account and company, and then not pay tax in the U.S. And like I said, I've opened up a lot of structures around the world and tax-free places, the Caribbean, Hong Kong, Dubai, and the U.S. is by far the easiest to open,
Okay,
and the
so
bank
I
account
think
with
what?
part. You know
Oh,
what I mean?
okay, I think yeah. That's the next question I wanted to ask because most people who incorporate outside where they are resident, especially like someone like me now, I hold a Nigerian passport, so it's actually very
Yeah,
complicated for banking and co
yeah, yeah.
for me. So how does that? Yeah, so things like that, you always have issues when it comes to the banking aspect of it and stuff like
Sure,
that. So
sure.
how easy is that? Yeah.
Yeah, I mean anyone could go and open up a U.S. company, right? The banking is, very particular to the banks, and we have a list. I think we've opened for Nigerian people, so it's like, but it's, I think it's due to particular banking regulations and whatnot. Like, oh, like
Yeah.
what's allowed or whatever. So it's like, I was looking at the other day, like we can open up for Chinese nationals, but we can't open up, or I shouldn't say we, like the banks that we work with, some of them can't open up for like people from Hong Kong, but they can open up for people from China. So it's,
Mm,
of course, like if you're on a blacklisted country like Iran or North Korea or Cuba,
yeah.
like, I know that's definitely it, but, it's pretty, the system's pretty open for opening up, for people with a lot of passports, well, from a lot of countries.
Okay. So now I think there was something you mentioned when we were talking about the about setting up in the US, and you talked about where you said if you don't have offices, if you don't have employees, you're able to do that tax free. But you mentioned something about e-commerce businesses being a bit more
Yeah.
complicated. So can you just go a bit in
Yeah, let's
yeah
go
into
into
that?
that. So, again, it's you can't have any offices or warehouses in the United States, right? And the issue is to truly have an e-commerce business, you have inventory, right? So for people with inventory, of course, it's like, well, where are you going to put the inventory? Of course, you have a warehouse, you have like one of these like 3PL logistical companies or Amazon FBA. And there's a bit of a debate within, the industry, meaning like the accounting industry or whatever, about if that counts as like having a warehouse, because like technically you don't own the warehouse. Amazon owns that warehouse. It's a quote unquote independent agent, which means that like it's not just relying on one e-commerce business, but like thousands. Anyways, I've we've sort of come to the conclusion that that it is U.S. effectively connected income. And so, like in e-commerce, it should be taxed in the U.S. Of course, there's always other ways to optimize, right? So, for example, let's say you buy stuff from China and you sell around the world. You open up a Hong Kong company, and you buy the goods from the Hong Kong company, and then you resell it to, let's say, a U.S. company that pays tax in the U.S. So you don't have to get tax on the whole. Buying from China and selling to the U.S. consumer, you would only get taxed on part of it because part of it would be in like Hong Kong, or you have a U.S. business, and as a foreign person, you pay yourself a salary from the U.S. business. Well, that salary from a U.S. company, even though the company might be taxable in the U.S. in this case, the salary to the owner, whoever is working outside the U.S. that's not American, is tax free. And so
Mm.
there's a lot of like different ways we could help optimize even in an e-commerce case. Um, but yeah, technically, like I said, my opinion is it would be taxable.
Okay. So now I think there was something else you mentioned also with a lot of U.S. residents living in the U.S. moving to states like Florida and Texas because they have lower taxes there. Now,
Yeah,
for non-residents, yeah, we always have. I know we always hear the difference: Delaware, Wyoming, and co for incorporation.
yeah,
So for you, for non-residents, what would you say is the best, or what are the best states for non-residents,
yeah.
and why?
Great question. Um, Yeah, because states matter, but for non-residents, I generally open up in the two places you mentioned, actually, like Wyoming versus Delaware, right? And my pick is generally Wyoming, right? Because it's a little cheaper, and it also has like anonymity, and it's sort of like you know gets the job done, so to speak. Like it's a great state. There are cases where I recommend Delaware, which is primarily for people that are going to get like investment money, right? Especially if you're like a tech startup or whatever, and you're going to go fundraise, and you might fundraise or ultimately fundraise from like any sort of like venture capital or whatnot. They still have a preference for Delaware, right? Due to
Mm.
just sort of like the case law there and whatnot. I mean, they're both Wyoming and Delaware are both pro business, but Delaware again it has a sort of more of a case law and whatnot with the courts. And so, generally speaking, we could recommend Delaware for those situations.
Okay, I think it cut off for a bit.
Yeah, no worries.
Yeah.
Um, Now I was saying again, like in those situations where there is a VC or an outside investor coming in, we recommend Delaware just for again the case law and the courts in Delaware.
Okay, so I think that settles that. So now I think the next question anyone will be asking is for maybe a non-resident who wants to incorporate in the US, what sort of cost range? Because I know there might be different factors that would affect it, but what sort of cost range should they be looking at initially?
Yeah. Yeah, I think initially you're looking at roughly like let's call it do Wyoming because I think it's more cost effective, but you're looking around like $900 to open, and then that's going to be around the same price every year to maintain it, right?
Oh,
Meaning, you have to, you're going to have to pay like $300-400 to the state of Wyoming, and then you're going to have to file a 5472 form with the IRS. It's about $500.
oh,
Yeah.
okay. Yeah, so I think that's actually affordable. And how long does it usually take to set up the
Yeah.
company, the
It
bank, everything?
usually takes about 2 to 4 weeks.
Okay.
So, I think it's like actually opening up the company is quick. But then we have
Mm.
to go apply. You basically open up the company, then you apply for a tax ID number with the IRS for the
Oh,
company. And then once you have the company docs and the tax ID number, you could go to the bank, and then the bank's actually usually pretty quick.
Okay, oh, that's
Yeah.
so actually that's actually it's affordable, it's quick too.
Affordable and quick. I'm telling you, it's really it's the best place. Like like Hong Kong or like the Caribbean, British Virgin Islands. I mean, it'll be double. And then the real issue with those countries is it's actually very difficult to open up bank accounts. So yeah, it's affordable and quick.
Yeah. Okay. So now, I think one other thing that I got caught up with, I think I've been running businesses for a long time. I think since 2010, and
Yeah,
one thing that you can easily get caught up with is record keeping, proper record keeping, and yeah, proper record keeping. Because, for instance, now when I started my UK company, it was just a normal, you just send your audited accounts and all that. But over time, we
yeah,
had to get VAT registered, and because of that, now the requirements just became, you have to file every 3 months. You need to keep records of VAT payments and non-VAT payments. You need to so many things that we didn't deal with
yeah.
before. Yeah. So like for a US company, what will record keeping? What are the things they should look a company owner should look out for in terms of record keeping? What records are important to keep? And
Yeah.
yeah, it's just about that.
Yeah, I mean, I think all right. So when for the U.S. company, there is this level of reporting again, like every year. Um, it's pretty high level. You don't have to technically report your profit and loss unless if it's a single owner LLC. You don't have to do this. If you have multiple owners, then you do actually have to do a profit and loss and a balance sheet. But a single owner, you only have to do a like basically showing it's called reportable transactions. So the money that you put into the business, right? Like if you
Hmm.
started the business, you put some expense to open up the company, and if you continue to put money, you have to show that, and then the money that you take out of the business, right? So if you take a dividend or a salary or whatever, you have to report this is how much I took out of the business. So it's really just essentially tracking the payments into the business and the payments you're taking out of the business throughout the year and just summarizing that.
Yeah. Okay, so I
Yeah.
think yeah, so I think that's even more straightforward than what I have to deal
Yeah.
with.
I was thinking everything it seems so easy.
So what's the catch?
Yeah, exactly, right? You sell your soul. Oh, you know what? I mean, that's a fair question. Again, I think you have to look at it just like, yeah, why does the US do this? I mean, the US, they want to have people doing business in the US, keeping their money in US dollars. You know what I mean? I think it's ultimately a play for, hey, like we're a capitalist country and we might make everyone, do business here. And, even if you don't have any clients or whatever here, like come and do that. Of course, like, because it's also easy to set up credit card processing, obviously the bank account, so you could, get money whether it's U.S. clients or non-U.S. clients. Like again, it's all tax free. It's the U.S.'s way to make the U.S. attractive for foreign people to do business and keep their money in the U.S.
Okay, so now I think one other
On
thing
top of
I
that,
remember. Yeah.
just the final, the other side of that, right, is of course, you get a U.S. bank account, but you could also get a U.S. brokerage account. So again, if you want to invest in U.S. stocks and ETFs and mutual funds, et cetera, um, you can do that. And then the capital gains are also tax free. But if you're getting any sort of interest or dividends from U.S. companies like Google or Apple, whatever, there is a tax withholding tax on that.
Okay, that's that actually sounds really good. So now you mentioned earlier about companies where U.S. citizens usually go to register companies to be tax free. So this is like South America, the Cayman Islands, and co. But was there a
Yeah,
reason why you didn't mention I think a lot of people these days want to go to places like Dubai. Was there a reason why you didn't mention that?
yeah. No, I mean, I think again, it's all about sort of like what your residency is, and then where to open up the company. So, like, Dubai has really come on the map the last few years as like a great place to, do a residency because it's tax free and have a company. And for many people, I do think that it's a good, they make a good case, especially for tax free, right? I mean, it's a place that you don't have to pay tax, but even then, these countries are always changing, right? So
Hmm.
Dubai, they entice everyone with the tax-free company as well, and then last year they changed it to 9%. Do you know what I mean? So there's all sorts of like, hey, come, and now no, we're going to change. And Portugal's another example where they entice people to come, and you have this NHR program and you get 10 years tax free, and
Hmm.
then they change that, but more for like the new people that want to apply. And so I think it's all about sort of like being aware of what's a good place, but also making sure that if you're going to do it, like, go for it, because there might be some changes. But I think
Changes.
even like the age old ones like Cayman or Hong Kong, I mean, I think they're always going to be tax free, so go
Hmm.
with a reliable one.
Very important. So now, for someone, going back to non-residents, let's say non-residents wants to set up a US company. What sort of documentation would they need to go through the entire process? Would they need to provide?
Yeah, great question. So, um, you need to have a passport, right? You need to show your passport for the banking process. I mean, basically, you pay the money, you give three names that you want your company to be, like kind of in order of preference to see. Obviously, if the first name's not available, you have to have two more to go down the list and hopefully open, and then that's that, and then for the bank account. So then you open up the company, you get the EIN number, the tax ID number, and then you go and you do the banking. And the banking really is, the passport and the um, the documents from the opening, and then also some banks are starting to require some sort of U.S. address, right? So it
Hmm.
could be either a friend or family member, et cetera, or that's candidly a service that we offer as well. Um, because in order to open up a bank account now, you need some type of U.S. address
Hmm.
and like a lease agreement or something like that that shows the U.S. address.
Oh,
Yeah. And
okay.
so with
So,
that, you can open up the bank account.
okay. So now I think if you go online, you probably search for information about this topic, both
Yeah.
reducing taxes as a U.S. resident and incorporating in the U.S. to reduce your taxes too for your business. You have a lot of people giving different types of advice. So for a person who is looking for advice, is confused, is seeing so many options, what would you tell them to
Yeah.
look out for to know that the person they want to deal with is genuine, knowledgeable, and can give them good results with no traps going forward?
Yeah. I mean, I think, again, it's, people should talk. I mean, to somebody, everyone's like, first it was, Google, and now like ChatGPT is everybody's friend. And, you know, they're a good starting point. But again, to your point, there's a lot of like bad stuff out there. Even ChatGPT, I mean, honestly, it gets it wrong like half the time when we do like
Yeah.
the tax stuff, where it doesn't like kind of tell the full, story about everything, right? Obviously our company, onlinetaxman.com for Americans who want to do their taxes, or uh, entity.inc for, foreigners that want to open up the U.S. We do offer consultations for online taxman. It's $69, but essentially to, have a consultation with an accountant to sort of go through your tax situation. And again, whether it's us or, again, maybe another company, I think it is important to just speak to somebody on the phone, clarify your doubts. Of course, like use ChatGPT, whatever, to do your homework, but talk to a real person and kind of, because everyone's situation is also very unique and different. Like we talked about earlier, there's like the
Yeah.
e-commerce stuff, whatever. Everyone has this residencies, and so it's important to really get advice based on your specific situation.
Okay. So now I think one other thing too, I think for the people watching or listening to be able to visualize the benefits and all that about and what we've been talking about. Do you have any success stories of anyone who probably maybe a US resident who incorporated abroad or a non-resident who, or maybe both non-residents who
Yeah.
incorporated in the US and what difference it made to their tax situation?
Yeah, I mean, listen, for the US people, I mean, I've had people that have moved abroad. We've helped them, and first they get the first 126,000 tax free, right? So you're saving roughly, by moving outside the US, you're saving roughly 30,000 annually,
Wow.
right? Of course, if you're going to incorporate abroad and live abroad, like I had a client that moved to Dubai, and he was paying 39% tax rate in California, over 40, actually over 40, and moved to Dubai and only paid 10.5% on the structure we provided, right? So, and this guy already had made, candidly, like a couple million a year. So this guy literally did save, $1 million a year. Do you know what I
Wow.
mean? And so, but it doesn't have to be that. I mean, again, it could be somebody who just is making 100 grand and all of a sudden moves from California, New York to Argentina, and I was again saving $25,000 a year just qualifying for this foreign earned income exclusion by living outside the U.S. for pretty much all the year, right? And I'll tell you the case study, because that case study was me, right? I moved outside the U.S. I didn't know what I was doing. I started a company, um, and living in Argentina, I was very super low cost of living, and then I didn't have to worry about paying taxes because I was making under the 120, and was able to focus on building my business, et cetera. And here I am today, and I've built a business over the last 10 plus years, right? So. Um, I would say, especially for people that are just starting that journey of whether you're building your consulting, coaching, tech, whatever sort of business. Again, living outside the U.S. as an American is a great, not only for your own life, goals and building, you're getting outside your comfort zone, but again, for saving money on taxes and just life costs, it's a great idea.
Yeah, yeah. Okay, so now for our listeners who have enjoyed this conversation, I know there's a lot we have not talked about, and they'll probably want to learn more about that, or probably they'll want to take action on what we've talked about so far, we've learned about so far. For those people, what's the best way they can reach out? Where can they learn more or contact you?
Yeah. So again, onlinetaxman.com is the website that we, have for, again, Americans living abroad or even foreigners that want to invest in the U.S. And then we also built a, specific site and brand, um, for, with a shopping cart feature. You could literally just go on and open up a U.S. company on, real time,
Hmm.
um, which is entity, ENTITY, dot Inc. And again, that's for people that want to open up U.S. companies that are foreigners. But again, happy to help. And again, if it's what you want or you want to schedule a consultation, we'll be ready to help you guys.
Okay, so I think onlinetaxman.com, entity.inc, those two will be on the
Yeah.
screen. They'll be in the show notes for anyone watching or listening. So thank you so much, Vincenzo, for coming on Tech Your Business
Thank you,
today.
Peter. It was awesome. Appreciate
Thank
it.
you. And for the listeners, I hope you've learned one or two things of how to reduce your tax exposure, and I hope you're going to take action on that and probably share the story with us when you do. If you know anyone who
Yeah.
this would help, share it with them too, and let them talk to Vincenzo here.
Exactly. This might be one of your most money making podcasts. Everyone's got to save so much money now, Peter.
Yeah. All right. So, Vincenzo, thank you so much. And listeners, thank you so much for watching, for listening. Till next week. Bye for now.